for gold, couple, $300 for silver, $3-4 probably. And I think it'll just go into the late summer. So September, October, I think we'll start to see the metals, regain traction. And of course, and unfortunately, I don't even like saying this, Elijah, but with the war drums beating ever louder as we speak, there's a possibility that gold could go up limit 3 days in a row to basis what's going on between this escalation and talking nuclear more and more frequently. So China has caught the silver bug, and their investment community is certainly participating in this rally, as well as the industrial commodity for use primarily in solar panels. And the same thing holds for India. So it's a very interesting market at this time, but the strength is still there.
In recent months, gold has been consolidating at high levels, which has weakened market sentiment and sparked bearish views. Gold experienced a strong 20% rally from mid-February to mid-April, setting 19 new nominal closing records and exciting traders. Interestingly, this rally was primarily driven by Chinese investors and central banks, rather than the usual drivers like speculators and US stock investors buying gold ETF shares. After peaking at $2,388 in mid-April, gold has fluctuated but maintained a range between $2,300 and $2,400, showing resilience despite a recent 2.7% decline. David Morgan from the Morgan Reports predicts that gold might see price movements of a couple $100, while silver could fluctuate by $3 to $4 during this period. He expects this consolidation phase to continue until late summer, around September or October, when both metals will likely regain momentum. Regarding silver prices, which ended the week slightly higher amid investor optimism for a Federal Reserve rate cut, despite the central bank's cautious stance, many investors who bought silver at high premiums are now considering selling as prices stabilize, aiming to break even or make slight profits. Despite this sell-off trend among retail investors, the wholesale market remains fundamentally bullish, driven by strong industrial and investment demand, particularly from China and India. For instance, China saw a rapid pace of solar panel installations in the first quarter of 2024, with the installation rate jumping by more than 1/3 year on year. Despite current trading ranges and consolidation phases, the industrial demand for silver remains strong, supported by investments beyond India and China, particularly in green technologies like solar energy. David emphasizes that underlying fundamentals for both gold and silver are strengthening, driven by institutional investments, central bank activities, and industrial demand. These factors enhance the long-term outlook for these metals despite temporary price fluctuations and geopolitical influences. We will present clips from David Morgan's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
We're in a consolidation period for both gold and silver. What are the exact ranges? I don't know. And they'll vary. It's not like a perfect channel formation between 2,200 and 2,400 for the next 3 or 4 months, but something like that for gold. And silver, obviously, it's gotten below 30 now, so maybe 29 to 31 in that range. Will it go below 25? I can't say it wouldn't. I doubt it, but it could. But basically, we're doing a trading range. How big or how wide is that trading range? I'm not sure. How long will it take? I don't know. But my guess is for gold, couple $300, for silver, $3-4 probably. And I think it'll just go into the late summer. So September, October, I think we'll start to see the metals, regain traction. And of course, and unfortunately, I don't even like saying this, Elijah, but with the war drums beating ever louder as we speak, there's a possibility that gold could go up limit 3 days in a row to basis what's going on between this escalation and talking nuclear more and more frequently. So that's a rather frightening prospect, that we can't rule it out, because something like that would override any quote unquote normal activity in the metals market. Fundamentals continue to get better and better, not only from the reasons to own gold, as we just outlined, but the fact that the central banks are leading the way and indicating that the smart money, or smartest money, is and has been moving into gold in a very deliberate manner. On top of that, if you look at the silver side of the equation, retail's pretty much been left out of this move. A lot of retail said, okay, I got $30 silver or $31 silver. I paid a very high premium months ago when silver was at 25, and it seemed like the retail market was extremely tight, and premium shot up, and paid $30 for $25 silver. Well, now you can go and cash out at, break even or maybe a slight profit. Maybe you bought too much. Maybe you don't believe the story. Maybe you just want to rebalance your portfolio. Who knows? But the facts are that the wholesale market is getting more sellbacks than buys from 3 or 4 that I'm very familiar with and can call and get direct information. But that doesn't mean that the market isn't fundamentally more bullish. And this is what we're seeing on the industrial side and the investment side outside of India and China. I mean, China has caught the silver bug, and their investment community is certainly participating in this rally, as well as the industrial commodity for use primarily in solar panels. And the same thing holds for India. So it's a very interesting market at this time, but the strength is still there. I'm not taking back what I said. We're going to consolidate. We're going to be in a trading range, but the fundamentals continue to improve.
The silver market has been volatile this week, with significant fluctuations creating a lot of noise. The $28.50 level, previously a resistance, has now become crucial support, attracting attention from traders and investors. The bounce from this support at the week's end indicates renewed buying interest. After its substantial recent rally, silver might need time to consolidate before moving upward. If it breaks above $30, it could rise to $32, signaling a strong bullish trend. David asserts that understanding the fundamentals of the monetary system can lead to a strong conviction in holding precious metals like silver and gold. Once individuals become aware of the intricacies and potential flaws within the monetary system, they often develop a stronger commitment to holding these assets. During market downturns, investors often feel pressured to sell, particularly if the market moves against them. This can lead to investors selling out ultimately to break even, only to miss out on potential future gains. David believes that the initial reasons for buying silver, such as hedging against economic uncertainties, likely still apply, underscoring the importance of maintaining some level of investment in precious metals for financial protection.
You're falling into a typical bull market, and the bull market, as we've discussed before, shakes off as many longs as they can. And this is one of those shake-off points. People that have, maybe they bought it at 18, maybe they bought it at 20, a 10% gain on that investment, that's 30, 40%. And again, a lot of people, and what I've seen, and of course I've been around a long time, but it's just my own personal experience. Once they learn the truth about how the monetary system works and what a scam it really is, where a few get to dictate the money power over the many, I've seen it many times where they kind of overdo it. They get it, they understand it, they verify it, they've educated themselves, and it is the truth. And it is a very unfortunate situation. And I'm gonna make it right for what I can control. That's me and my personal finances. So, all my available cash, I'm moving into gold, whatever. And that's an extreme example, but a lot of people do go overboard. And when I put out the 10 rules of silver investing, which could apply to gold investing, apply to other investments actually in some cases. But the idea is to take a long-term view, dollar cost average. And then I said in that rules, I forget which rule it is, but something like too much of a good thing is too much of a good thing. In other words, I was recommending a certain percentage and not to go overboard, because you don't need to go overboard to have a hedge, a balance, and almost a certainty that you have prepared yourself financially for probably a worst case scenario. And that was my, principled approach to try and help everyone that was a new or a seasoned investor in the precious metals, because, like the amount of nutrients or vitamins or whatever, there's kind of the precise amount, so many milligrams on a certain medicine, perhaps. So I'm just giving the idea that you don't need to do too much. But I find over and over that that's the case. And that's why these people feel a lot of pressure when the market moves against them they can hardly wait to break even and sell out. And rather than sell out and get to a portion that's an amount that they're comfortable with, they will sell out the whole thing and forget about it. Then the market moves up $10 against them, or they would have made a double their money from 20 to 40, for example. Now they get back in and they left all that on the table. So long-winded answer, but I've seen it over and over. And having that experience, I would say, look, if you have too much, sell down to where you're comfortable. Please don't sell out. You know why you bought it. If the reason you bought it has changed, well, then go ahead and sell. If you bought it to, get a gain so you could pay off a debt or something, and that changed or that occurred and it happened and you did it, and that's the reason you bought it, okay, fine. But if you bought it for the reason most of us do, and that is to hedge the inevitable, you don't have any reason selling at all.
Despite near-term uncertainty, the long-term outlook for silver remains bullish. Central bank buying, especially from China, supports this view, driven by China's efforts to diversify reserves and reduce dependency on the US dollar. For gold, the current economic data and investor sentiment suggest near-term support. Weakening inflation enhances gold's appeal as a safe haven asset. While potential pullbacks may occur, they should be seen as buying opportunities. Share your thoughts on David's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.